Appreciate you guys taking the time.
Is being recorded.
Join us. Welcome to episode 2 of our Leaders in Lending webinar series. For those who weren't able to join us last month for our episode 1, we had some influential, and we're looking to continue those conversations here today. We've got an exciting topic to discuss. As an industry, we've been working towards responsibly modernizing the appraisal space for quite some time, and it's exciting to see a lot of that hard work start to yield some results. So today we're going to talk about inspection-based waivers and touch on how class valuation is supporting that process with our property fingerprint report. We've got a great cast of folks on with us to share their knowledge and perspectives. From Fannie Mae, we have Justin Alexander. From Mr. Cooper, we have Eric Armstrong and Emmett Myatt. And from Class Valuation, we have my colleague Scott Rose. So before we kick things off, I'd like to give those folks a quick opportunity to introduce themselves. Justin, do you want to start?
Sure, you bet. Good morning, everyone, or good afternoon, depending on where you're at. My name is Justin Alexander. I'm Director of Collateral Strategy and Innovation for Fannie Mae. Been with Fannie Mae for about 3 years now. My team is primarily responsible for innovation, testing different types of technology and processes, and then our pilots that we have ongoing.
Thanks, Justin. Eric, Emmett, do you gentlemen want to introduce yourselves?
Sure. Eric Armstrong and Mr. Cooper. I'm VP of Business Controls here, and my team generally handles all of the change management for originations, including implementing some of the appraisal modernization efforts for both agencies. Pretty excited about the opportunity ahead and some of the kind of changing landscape to help our borrowers and our team members kind of navigate what have been cycle time and other concerns in the space. So excited to talk about it.
And I'm Emmett Myatt, VP of Process Reengineering, which is just a fancy way of saying I deal with all of our vendors in the originations world. And I echo Eric's sentiments there that we're very excited about some of these opportunities that are coming up and availability of some of these new products. So happy to talk about it and look forward to the conversation today.
Great. Thanks, Emmett. We look forward to the conversation as well. Scott?
Yeah, good morning. Good afternoon, everybody. Scott Rose, Chief Innovation Officer at Class Valuation. And just echo what everyone else is saying. We are also very excited about these new products and solutions and finally seeing them come to bear. Been a lot of work that's gone into this with multiple parties across the industry over the last few years. So I'm excited to chat with everybody today.
Great, thanks, Scott. So to kick things off, folks, I'd like to pose a couple of questions to Justin. Justin, if you're good with that.
Sure.
So, Justin, inspection-based waivers have been in testing for, I think, well over 3 years. I guess first and foremost, for those who may not have had too much exposure to inspection-based waivers, I think a quick overview from your perspective might be helpful. But then I'd like to hear a little bit from your side as to what we've learned throughout these and where you see us headed as a result.
Yeah, so we've been, as you mentioned, we've been testing inspection-based waivers for several years now. What that consists of is a property data standard that we've created. So a standardized set of data that's captured at the property during the property inspection. We have an API that data comes in through. So there's companies like Class and other AMCs who built technology to capture this data standard. And then that data comes to us and we make a decision on it. It updates our models. Do we have enough data? Are our models confident enough at that point to offer the waiver? If so, then we would offer that to the lender. If not, then then we would offer a hybrid appraisal option where the appraisal would be ordered and the appraiser would complete the hybrid appraisal using the property data that was collected at the property. So we have been testing that. I mean, one of the big things that we've learned in that process is that lenders would like to see maybe a little bit more certainty in that process. So whereas today you have to go, we require that lenders go procure a property data collection and then we determine which path it's going to go down. One of the things that we've heard is that lenders would like to see a little bit of certainty there. So we're working on a solution that would offer the waiver upfront in the process to give that certainty, contingent upon a successful delivery of a property data collection through our API. So I think that's kind of one of the things that's coming. I know recently Freddie announced a ACE plus PDR. Think of a similar type option that we're working on currently.
That's exciting stuff. Thanks, Justin.
Yeah. One additional thing. I mean, one of the biggest challenges that we've seen in that property data collection process has been the ability for a third-party data collector to accurately measure and produce a floor plan like an appraiser does. I'm a real estate appraiser by trade, and we all kind of learn how to do it differently. But we've seen that largely be solved by technology. I know Class has a solution out there that with technology can go in and capture a lot of photography that ultimately will put together a floor plan and measure the house accurately. So, we've seen that as a big win for this space.
Appreciate you sharing that, Justin, and it kind of is a good segue for me to get some insight from Scott Rose. So, Scott, there's a lot of solutions in the marketplace today. There's likely, quite a few more to come. I guess from a tech perspective, what's important for lenders to understand, and how does Class Properties Fingerprint play a role?
Sure. So, obviously there's multiple solutions in the marketplace today that use photogrammetry and LiDAR to generate floor plans, but not all of them generate a complete virtual twin of the home to be utilized, especially as you get into any of the downstream products like hybrid or desktop, where the appraiser is involved. And with the 3D scan technology we use, we capture full 360 imagery and are able to stitch that all together for a complete virtual tour, both inside and outside of the home. So the appraiser has everything required that they need to be able to understand that property and its characteristics. And also we've integrated with their formsware to provide, a high degree of efficiency in their time once they're able to interact with the data and push that all into their forms. And we've been able to see significant improvement in appraisal quality using these tools, especially the imagery component, which really drives those downstream results. So if you don't have that full digital twin of the home, it's very difficult to derive those same outcomes. 85% reduction in revision rates. We've seen a 65% reduction in requests for reconsiderations coming from consumers, loan officers, real estate agents, et cetera, through that process. And so I think that says a lot about the high degree of quality that comes when you're able to get that full transparency of the home. And it also inspires confidence with the folks who are having to, leverage this data and information to generate appraisals. As Justin mentioned, I'm an appraiser as well. And there are still certifications that are required in the desktop and the hybrid process. And so being provided this comprehensive amount of information makes them feel a lot more confident in delivering these products.
Great perspective, Scott. So, you mentioned revisions, and that's something that I think sometimes falls by the wayside in terms of how important it actually is, right? It does lenders no use to receive a report in a very quick turn time if that report isn't usable and actionable. So the fact that we're able to reduce revisions the way we have is a huge value add. I'd like to ask Eric and or Emmett, from their perspectives, how has leveraging inspection-based waivers impacted the business, and what are their thoughts on these products into the future?
I think the impact for us has been significant. We've seen, a very positive outcome in our turn times and the ability
Eric or
to
Emmett, have you-
reduce time using the PDR products, and the hybrid and the desktop, being able to reduce, 1, 2, 3, 4 days out of the process at times. And specific to your QC commented about revision rates, we've also seen that revision rates are lower. And even if we do have revisions, we've seen the number of times that revisions are requested are lower, where at times on, standard products, you might request a revision twice or 3 times, depending on the information you get back. Typically, these are, single requests that are easily fixed even when we do have a revision. So we've seen that same kind of benefit that you're talking about, Scott.
Yeah, I would add to it. I mean, those are the 3 primary categories, right? Talk about reduced revisions. We want to talk about value, accuracy, or certainty, right? I think the class team is measuring that with reconsiderations of value. We've been measuring it against basically the propensity within which we hit what we thought the initial value was against their standard 1004 counterparts. In addition, we're looking at benefit to turn time. And I'd be wrong to say if we didn't add in the fact that we think this benefits our customers, right? It's a big piece. We think turn time is important to deliver on their expectation of what is perceived to be timely, but also, if you can get into some of the products that Justin commented on, potentially where all you need is a property data report to get a value waiver, or using the ACE plus PDR product that's out there, you could deliver a lower cost product to them that can get turned faster with the certainty of value like you have with the waiver. So, it's a little bit of playing offense with some of the new products like desktop and hybrids, if they're available to you. And it's a little bit playing defense with trying to get PDRs in place of what might have been waivers before, or maybe even expanding the waiver population, to give, I'm gonna assume, but to give the agency some verification of the property condition where they're comfortable with the value that's being submitted to the US.
Yeah, we have.
Go ahead, Justin.
Yeah, so there are a myriad of reasons that a loan would fall out of our traditional appraisal waiver. For example, things like if the loan was located in a disaster area where we don't know if that property is still standing. There's many other factors that would push a loan out of our traditional waiver, where the inspection-based waiver, if we could get a current view of that property, our models are confident in the value. We just need a current view of that property, and that's where this type of product comes in at.
I was going to add as well, as we're talking about these spectrum of products and solutions that work off of the core of property data collection. The desktop, right, a solution that recently came out this year, which a lot of people have had some poor experience with, and expecting that maybe that data is readily available out in the marketplace today, which oftentimes it might not be. But when you apply and supplement the desktop process with data collection, it does improve the overall outcome. You do see the reduced cycle time, you do see the improved quality, all the things that Emmett and Eric were just talking about. And so I think one of the things that we've seen with Mr. Cooper is when you apply that process appropriately, it's actually a great product. And downstream, there's a lot of opportunity in that product. As the market develops and understands that this data can be collected at time of list, we could be seeing purchase, appraisals done in hours instead of days or weeks. So really leading us to the next time we have another one of these really huge mortgage cycles where appraisers, where that capacity constraints comes in, not only will we, alleviate some issue there, but we're also going to streamline the process in standard times as well, like we're in today. I mean, we're still seeing faster turn times now when the market has come back quite a bit and appraiser capacity is available in compared to traditional appraisals.
Scott and folks, I know we're typically waiting until the end to hit the Q&A, but there's a question that popped up that I think is relevant to what we're talking about right now. How or what is contributing exactly to the decrease in requests for reconsiderations of value? I think we touched on it, but maybe getting some additional color around that, Scott, would be helpful.
Yeah, you bet. Well, I think for one, again, this is where I think the technology of choice makes a difference. If you're generating a complete virtual rendition of that home in comparison to maybe just leveraging two-dimensional images with some textual comments, I think you may not see the same outcome. But when you fully image that home completely with the full amount of transparency that is there, I think it gives a lot more data and information for one, and the lack of potential bias, because now the appraiser's developing their opinions based off the data that's being provided to them in a completely transparent way. So we know the imagery has a lot to do with the lack of revision. Same would be in terms of the measurements of the home, right? Oftentimes people have question around, was my property measured accurately? It's, there were mistakes in the manual process of measurement. When you take these more advanced technologies that deliver very highly accurate measurements, I think it reduces the chance for error, as well as a standard way of collecting data. We can send 5 people to the property and get the same 5 results every time. So it's standardized, it's repeatable, and it delivers consistent results, really removing the potential for human error in that data collection.
I would also add that, the data collection standard that we've built that class fulfills today is really much more comprehensive than any inspection I ever did as an appraiser. So there is a lot of very objective, standardized data that we're having someone collect. And I think that ultimately goes towards just a more objective process that leads to less revisions.
Appreciate that point, Justin. So, and I think it's important for everyone to understand, right? As we're working to modernize the space, right? We've actually increased the scope of the valuation in a sense by collecting more robust data on site.
Yeah, exactly right. And I mean, as technology can do more, maybe there's a day in the future where we're collecting a whole lot more than what we are today, just because we can't ask a human to capture certain things like a volume of a home or roof pitch, things like that we know that technology will ultimately be able to do. There may be a day where we're considering certain aspects of the property that we just can't do today because it's too hard for a human to collect. So really excited about where we think things can go with technology.
Yeah, and just to add, Scott, to your comments around desktop, we have been, with the requirements there for the walls in sketch and really identification of what's happening inside the property, we have been pretty heavily reliant on the data report, or sending someone to capture that data, very similar to what you'd see in hybrid or what you see with the PDR or other collection efforts itself, to enable the appraiser to produce the desktop, rather than attempt to order a desktop only to find out they don't have what they need available to them, and then have to kind of pivot to schedule some time to get into the home and convert that to a standard appraisal. So we've seen some success in that space. It produced, I think, a more consistent process. I don't necessarily think it's in line with where we want that to be eventually, but the idea is that as that technology gets more proven, adopted, maybe the realtors start to adopt this type of process. Maybe the data collection starts to happen, like you mentioned, at the time of list. In general, I think there's more opportunities for it to expand and grow as there's more and more adoption and more data collectors in the workforce in the areas that you guys are supporting. So all good things. And we've seen, I think what we expect from a cycle time improvement because of it, including the data collection step.
100% agree. I know Matt's been having some connectivity issues. Matt, I'm not sure if you're there or not.
Yeah, guys,
Okay.
I am on. Hopefully everyone can hear me.
Yep, we can.
So I guess, a broad question to the group. We're talking about the benefits of all of this. In terms of today's market, why is it now the time to really push for these processes and these improvements? Just
No one
so
jump.
we can get your perspective on that, and then maybe move on to Scott.
I mean, volumes are down, obviously. So, we've seen some hesitancy for some lenders to kind of jump in and try some of these alternative products just because volume is down. But we think that the market's going to turn at some point, and then the appraiser capacity issues that we all faced 6 months, a year ago, are going to be back. And we'd like to, when that happens, have some of these alternative type products to be able to relieve some of that capacity.
I agree 100%. Now is the time. Not time to be complacent. It's time to be aggressive and really focus on the future. We're working to bring more appraisers into the profession at the same time. These technologies can really help support the various ways to join the profession, and there's some new ways that are coming about around that as well that we'll continue to focus on and really bring more talent into the profession. We do have a aging population of appraisers who are retiring. Many more might retire during this slower time period, right? Because volumes are down. And so when that next spike comes, we may have less appraisers available to us if we're not attentive right now at bringing more talent in and focusing on these alternative methods to really support the profession and the time that the market comes back. And we will see that, right? We're in a high interest rate market environment now. And so anyone acquiring homes today at some point is probably going to be going through a refinance process in the future when rates trickle back down.
Eric or Emmett, from your perspective?
I think now is the time because of exactly what they're saying, where the volume right now is not as high as it was. You can work at perfecting those processes, getting them in place, making sure that you have all of the things necessary to have a valid and stable process ready for when things do come back. As far as, from the lender side, I think that's the best way to approach it, to make sure that you are ready and you're not trying to handle, hundreds of thousands of these across the industry at the time, when now we can actually be handling a much smaller volume than that and be ready when that ramp up occurs. Also, with the new appraisers coming in, bringing them in, teaching them this new technology process and the way of thinking about appraisals and how this works, I think that just continues to, put a good foot forward on having that adoption at the appraiser level.
I agree with all those things too. And I would circle back, not to belabor, but the impact to the customer. Right. So you talk about desktop opportunities of purchase and how cycle time is so impacted by contract dates and days to close. And the purchase market is still, there still are customers out there buying homes, looking to get into new homes, either upgrade or downgrade, even in today's market, with the expectation that at some point in time in the future, maybe they'll refinance to get a lower rate. And then I would add on specifically to the ACE plus PDR space, because that's out there. I know Justin, the Fannie is coming, but in that space, right, on the refinance side, most of our volume today we're seeing is in debt consolidation, cash out, and the waiver opportunities are at this point almost non-existent on their side, and ACE plus PDR is the replacement to it. So in order for us to get some of the value certainty that we were seeing 6 to 8 months ago or prior to their change in July, we have to adopt these things. If not, we've got to go and get full appraisals. And, given where the market's at, we see appraisals come in light more than we were seeing previously. And the rapid appreciation that the industry experienced over the last kind of 2 years at this point is at least stalled. And we'll see kind of how that plays out. So the more value certainty we can get, the better. If we can offer these loans with just a property data report at potentially a lower cost, to our customers and then see the improved cycle time. It's like you have to, if you care about your customers, you have to think about these products as options.
I agree. I would just add to that too. I mean,
Appreciate
really,
that.
oh, sorry, Matt. I was just gonna note that these modernization initiatives that we've been working on for the last few years, it's important to really for us at class, it was important to think about all constituents and ensure an improved outcome and experience for everyone involved, all the stakeholders. You know, with these, we can't just focus on shorter turn times, but then degrade in quality and cause downstream concerns for risk holders, right? You don't want to do anything to affect the consumer experience. And, you know, there's a lot of people in this process that are constituents to the appraisal. And so I think that the industry has done a great job of really focusing to ensure an improved experience across all those stakeholders, and it's extremely important.
Thanks for that, Scott. So one of the things I kind of wanted to touch on, again, it was mentioned a few times, but I think we're faced with a unique opportunity here. While we're looking to bring additional folks into the appraisal space, we're also being afforded the opportunity to help further diversify the demographic of the appraisal space, which I think is important to note. And then, Scott, you mentioned this a little bit earlier, but as we're working towards, you know, the standardized data collection solution, right? How does it impact appraisal bias? Because that's been a topic that we've heard a lot about in the recent months.
Yeah, so you know, to kind of answer both your questions, I mean, part of the effort as we bring more talent into the profession is to ensure that we do have a high degree of focus on bringing more diversity into the appraisal profession at the same time, right? And really, there's a great opportunity to do that right now as we embark on gaining new talent. In terms of its effect on bias, I think it's, you know, still some you know, time to go by to really see and measurable results, but we know conceptually that these ways of collecting data in a standard way and in a comprehensive way, again, using 3D scan technology, gives a full transparent view of the property. So someone can't take a picture in this direction and not in that direction. You can't present the property in a certain way to achieve, you know, certain outcomes. It's a fully transparent view of the property. And as I mentioned, I think there's still some, you know, time to come to really prove it all out. But, you know, conceptually, we do believe it will make a big impact on bias as it is today. And we've been recognized for that through, you know, the Brookings Institute Challenge recently. And, you know, people who are completely independent looking at ways to modernize the profession are seeing the value in these types of tools. You know, again, you send 5 people out, you get the same 5 results every single time. It's repeatable, it's more scientific, and it's more transparent around how the data is collected. And, you know, whether any form of bias, one way or the other, what we've seen, you know, throughout history. I mean, I spent 6 years on the board of real estate appraisers. Justin's been in this industry for quite some time on the risk side. And typically when values are misrepresented, 99% of the time, the property was misrepresented with it, right? You had to misrepresent the subject property to achieve some sort of downstream outcome. And so when that is taken out of the appraiser's hand, and now the data is being delivered to them to base their opinions, it takes away a degree of ability for anyone to manipulate an outcome. I don't know if anyone else has anything to add on that front.
I mean, I agree with everything you said 100%, Scott. I mean, we just want the right answer. That's what we're looking for. And to the extent that we can adopt standards and adopt technology that can capture things in a standard, objective way. I mean, that we think all of this heads in the direction of helping to protect the appraiser too. I mean, and giving appraisers tools that will collect data, you know, a standard, objective way, all the better. So we support all of that 100%.
interesting point that you raised there, Justin. So I think, initially when we set down this path, the reception from appraisers was sort of, questionable, right? Like, and I think to all of our
We lost Matt.
Did we lose him?
guys, am I in and out? I apologize.
Yeah, I bet we didn't catch the end of that last question, Matt.
Just comment on the reception from appraisers.
Yeah, I mean, I think it's evolved. We're not Fannie Mae is not anti-appraiser. We're pro-appraiser. We believe that we believe that we're going to need appraisals in the future. So I mean, I think it's evolved. I think COVID kind of, as horrible as COVID was in so many areas, I mean, I think it kind of with the options that we put in around the exterior appraisal and the desktop, I think it kind of pushed appraisers in that direction and opened them up a little bit to that. So yeah, I mean, it's coming around, but we continue to have industry events and webinars like this just to help get out that message that we're really just looking for objective data. We want to get the right answer and take as much of the subjectivity out as we can.
Yeah, on our side at Class, I mean, appraiser adoption is really non-issue for us at this point. I think we focused a really high degree of our solution on the appraiser out of the gate. That was one of the reasons we went for a more comprehensive way of collecting data. It might have been a little harder out of the gate, but it pays off in dividends downstream for everybody involved. And so, our appraisers they have no worries about whether a photo was missed or taken from a wrong angle, or if it's dark or blurry. It's not a two-dimensional image taken from a mobile application. It's high quality HDR imagery as well as the virtual tour. They can go in and take another picture in the virtual tour itself and add that to their report as if they were there physically. So it does inspire confidence that they have the ability to see the whole property, zoom in, zoom out in such high detail. So we really have, at this point, zero issue with appraiser adoption. I think what we're seeing now is starting to ensure that we're helping the marketplace understand that maybe if they've had poor experiences with other solutions, or historically as some of these first rolled out, that if you do it the right way and you apply the right technology, you actually do see superior results. And really building that adoption now on the front lines, real estate agents, loan officers, and others recognizing that this is a real value for you and your customer to buy into these solutions. And there's been a lot of testing, and we've done 20,000 at Class, right? So we have a lot of data and a lot of experience, and every KPI across the board sees an improved result using these technologies in the process. But I do think it's important that you apply technology to the process in order to have those outcomes.
Good perspective, Scott. So for those who may have been involved in some of the earlier test and learns, right, and have had not so optimal experiences, now's the time for them to kind of dip their foot back in the pool and start to explore this again.
100%. Emmett,
Yeah.
or Eric, I don't know if you guys have anything to add there.
I mean, we were probably in part of that. So I think we participated in some early test and learns, kind of backed out of it once there was less opportunity, and then navigated through, Justin, to your comments around COVID, right? COVID, as bad as it was generally beneficial for the mortgage industry, but it created a lot of volume. It created a lot of stress on our teams. It created a lot of stress on the appraisal network and pretty much every other third-party service provider that uses people to solve the problems. And I think the technology is key. While I don't know that we have enough data to say how appraisers feel, we generally are probably not in that space, as our orders are going out to providers like Class and others, where you guys are managing the appraiser sentiment. It's good to see, and in many cases, very infrequently are we seeing anything not come back with the order that we're looking to get, meaning that the people are there to support the volume that's out there today. And I think that's growing. I think we've continued to see a growth class, and eventually look to see this kind of offered everywhere we can get, a customer that might fit in the box for the agency's AUS requirements.
And just to add one other thing there as well, I mean, we don't, specifically, speak with or know about appraiser adoption, but what I can say is that even as far as what Eric said about not really having a product come back that we didn't order, but even on the other side of it, when potentially we've ordered a hybrid or a desktop in an area that maybe Class or our other vendors haven't really told us that they support in that county yet, we still are having some success with that still coming back because they're finding an appraiser and an inspector who can do those things. So I think that points to adoption is going in a positive direction.
Yeah, we've just one last point. I mean, we work with a number of vendors in pilot and testing some of these alternative valuations, and it's not uncommon anymore for us to have vendors tell us that they have appraisers that don't want anything but a desktop or hybrid appraisal. I think the appraisers are starting to realize that they can, the data coming through is standardized and it's robust, and that they can potentially sit at their desk and do a number of these things and potentially make more money. I think as we start to roll out more of these options, as Freddie kind of expands there too, it'll create more opportunities for appraisers.
I agree, especially appraisers that are in difficult climates, right? You're not out tromping around in 2 feet of snow in the middle of the winter, or slipping on ice, and or going through thorny bushes and everything that you have to do on site. And granted, some appraisers love that, and I appreciate that. A lot of appraisers love being out in the field, and so I recognize that as well. But I think there's a huge constituent of appraisers out there that really love the desktop work. Gives them a lot of flexibility to move around and be in different geographic regions and continue to execute in their profession, and even extending their years into retirement, right? Being able to do work at their desk and continue to earn income into later years.
That's my retirement plan, Scott.
You and me both.
I think I may have to go pursue my license.
We have a great trainee program for you, Matt. We can put you through.
Thanks, Scott. I appreciate it. Before we go to the Q&A, I just, the overwhelming perspective from the folks at Mr. Cooper has been, obviously you need quality data, quality reports coming back, but the compression of the valuation process seems to be a massive lift. I guess from your perspectives, where would you like to see that cycle time actually land? Is it 2 days? Is it 4 days? What would be optimal in your eyes?
If we really want to get down to it, I mean, 4 days or less would be something that would be phenomenal to see if we could get that to that point. I think there's opportunities to look at other technology enhancements here and ways and paths that we could take to even squeeze that more. But for the products that are out there, I think that 4 day, 5 day turn time would be great for the industry.
I generally agree. I think we talk about maybe Q3, Q4 last year, we were seeing appraisal turn times 3 weeks plus in some areas. Obviously there was pricing issues, but it felt like across the board. But you get back to maybe one more normal state where you see something like 2 weeks, somewhere in the 10 calendar days, 10 to 14 calendar days. And even there's opportunity for us to get better. And you got to think about appraisal is one piece of the puzzle. There's a ton of organizations like ourselves and others taking this time, right? Less volume. Let's try and streamline processes. Let's try and make things work faster. How can we deliver a better experience to our customers? And what we try to do is at least avoid the appraisal being the thing that takes the longest. And in many cases, I think if you can get within that 1 week turn time, 5 business days, somewhere in that space, then ultimately we can take an application the customer put together, bundle everything up, get it to an underwriter in one step, not reduce our touches, reduce our review, reduce the amount of conditions we add to the customer after the fact for revisions or other things to occur. So I think 1 week's probably the best place to be, but the shorter the better, right? 1 day would be great. I just don't think 1 day is realistic. In that 1 week space is best, and then we can better set the expectations on the initial call on someone coming to the house, when they need to be available, how long that will take, how fast we can get it scheduled, and everybody can kind of deliver on the initial expectations.
So quicker the better, obviously from a borrower's perspective is great. I guess, if we're able to push towards that, 1-2 business day turn time down the road in the future, what does that look like from an underwriting perspective, Eric? And how does that impact capacity on your side?
Significantly, right? So I think, we're not there, so we're talking a little bit hypothetical,
Sure.
but I would say, we have seen appraisals come back early, and in our process, in many cases, the underwriters are reviewing the file without an appraisal, meaning that they'll review it again at a later time once it comes in to review the appraisals, see if there are any other things required. If the property or the appraisal comes back subject to repairs, we have to then go back and inform the borrowers on what's needed. Where if we can get it done for that initial review, effectively all in one cohesive package, we can say, here are the things we need for your income, for your assets, and here's what we need for your property or other items. Instead of creating a scenario where it's like, here's half of it, we'll come back and get the other half later, leaving them with kind of uncertainty on what's going to happen moving forward. So if we can get it done where we can get everything done in that early review, I think everybody walks away with a real clear expectation on how to get to close and then how to get the loans funded.
Yeah, I appreciate you sharing that. We have a couple of questions in the Q&A, so I'd like to, anybody on the line listening in, if you have questions for the group here, please enter them in the Q&A and we'll talk through those. Before we jump into the Q&A, does anybody else have any additional thoughts to share, or should we jump into the couple of questions that are in there?
I think the only thing I'll point out, Matt, in the overall cycle time is it's not just that upfront turnaround time that plays a role here. And, Emmett touched on it earlier, as well as Eric, but when you defriction the whole process with reducing those revisions, reducing those additional touch points on the appraisal, that also helps get that overall, length of time significantly shorter. So it combines, we're seeing faster front end turn times, but we're also defrictioning the back end, and we'll continue to work, to do more there as well.
Yeah, on that kind of that turn time topic, we think a big part of this is the standardization of data, and we've talked a lot about that. But if we can get other groups across the industry kind of bought into collecting this data, and I'm thinking realtors, and we've mentioned it a couple of times so far, but data at list, like if we can get a standardized data set captured at the time a property is listed, well, then that data is there ready to either be used in a waiver decision or be used for the appraiser to complete the desktop or the hybrid appraisal, that immediately without having to go out and do the inspection or the property data collection. So I think that's a really big opportunity. And we've had conversations with NAR and other CMLS organizations, to kind of try to push some of these concepts.
Agree 100%.
Great, thanks, Justin. So there are 3 questions in the box right now, 2 tech related, 1 process related. So to start with the process question, I think, Justin, this one probably goes to you. Will these reports need to run through UCDP?
Yeah, so kind of 2 things I would say. There's the property data collection, PDR is what Freddie calls it. We call it PDC. We do have an API that data comes through. We do have a web viewer so that the user can view that PDC and in a nice web view places all the photos in one spot, all the data together in one spot, so that a lender or underwriter can review it. So those would not go through UCDP. The hybrid and the desktop appraisals, those would go through UCDP.
Thank you. Scott, this one's is likely to you. Can class speak to the percentage of the appraiser panel who have 3D scanners deployed? I'm assuming that means what percentage of the country we can cover, or is the majority of 3D scans being completed by non-appraiser contractors? I think we touched on this, but if you want to clarify there.
Yeah. From our perspective, the point here is to use non-appraisers to do the data collection and outfit them with the technology to do so, right? Depend on the technology to do the work and really focus on individuals that have a high degree of customer service experience and bringing that consumer impact. And one thing we haven't touched on here today is, nothing against appraisers out there, but the alternative workforce is much more accommodating. They're willing to go out on weekends for the consumers. They'll go in after hours, and it's just easier for us to find someone to go out and accommodate the consumers' availability, as well as really focus on building more capacity in the profession. Keep the appraiser at their desk where their highest and best use in the processes belongs, right? In terms of availability around the country, I think we have close to 80% of the households covered at this point in time, but continuing to expand as we go. So really working hard to get to more and more coverage with our 3D scan network.
Awesome. This may go for everyone. There's a question related to drone type technology, specifically mentioning, to analyze roof pitch and things of that nature. Have we seen that type of technology come into play at all? And is it deemed to be necessary at this point?
I'll answer, and then Justin might have some feedback as well, because he sees a broader spectrum of providers out there. Drones may have a point at some point in time in this process. From our perspective, it's not today. You really need to get to the inside of the house to get the data and information that we need. And so using imagery to do that is the technology that we've really been focused on. Is there a point in time where drones carry the camera and fly around the inside of a house? Potentially, but I don't think we're there yet. And in terms of roof pitch and things of that nature, it's not part of the data spec today, but I think there's a lot of things we're working on, and our imagery can also capture data and information from the exterior of the house. So we'll be able to continue to advance the data that's available for folks like Justin and his friends across the river. So Justin, I don't know if you have any thing to add there.
Yeah, I agree with everything you've said. It's not something we've tested currently or that we're testing right now. Could there be a day where that becomes something that we would want to look at? Potentially, but I think there you have satellite imagery capability that's able to be refreshed much more often than what it used to be. So that may also play a role. But it's not something we're testing today.
Justin, this one's for you. We have a viewer asking if there's a Fannie Mae bulletin outlining the guidelines for these processes that's available publicly.
So our desktop option is in our selling guide, effective in March. So that was a joint GSE announcement. What we have in pilot, we're still in pilot on our inspection-based waiver and hybrid products. So we're looking to roll those out hopefully early next year. So that's the pilot that I'm talking about happens after the property data has been collected. And that's in pilot. We are working on a solution similar to Freddie's ACE plus PDR that we hope to have rolled out into this year, first part of next year. So to answer the question directly, we do not have a bulletin on those out yet.
Okay. Thanks, Justin. Here's an interesting question from a viewer. Would the property detail information, mainly the GLA, be provided to the local tax assessment offices to provide an accurate property data set? We often hear complaints about measured GLA differing from tax records.
Justin, I don't know if you have any thoughts on that. I mean, today I would say no. The public record data sources that they use to capture GLA are coming through different, depending on the municipality you're in. They have different ways to capture that property data and information. But I would say conceptually for the future, I do believe this will bring more standardization to how property data is reported, whether it be public record, whether it be MLS, whether it be appraisals, property data collection. I think one of the things that the, Benny and others are trying to do is to drive that standardization, to build a standard out there. Because as of today, you're going to get a different report about that property across all these different verticals and have to reconcile which one is actually accurate.
Yeah, it's a big reason. It's a big reason that we adopted the ANSI measurement standard, effective in April of this year. So I learned to measure a home differently than what Scott did. And if we went out to the same house, we might come up with a different measurement or different GLA. But we saw these technologies like Class has and others being developed. And we thought it was important that we adopt a standard now so that, 15 years from now, we don't have a bunch of different technologies out there doing things differently. We want them all to be built to the same standards so that they could be leveraged not only in the appraisal, but in the listing of the property and tax assessor records, et cetera.
Great, thanks, Justin. We have time for a couple more here. So here's another question. My understanding is that this process is creating a new job force dynamic with the data collection piece. Is this another way to bolster the appraisal profession by getting individuals involved who may decide to move into the appraisal aspect? This got a little bit in terms of bringing new folks into the industry, but maybe you have a couple more comments around that.
Yeah, 100%. I see that question coming from my friend and colleague, Rich. And yes, it's a great opportunity for folks to get involved and have a path into becoming appraiser trainees and continuing on to the appraisal profession itself. So we do see that as a big opportunity.
Great. Quick question directed to Justin. Can desktops be used now for Fannie Mae loans?
Yes, they can be. That's for purchase only, single family, up to 90% LTV. So we do have a defined box, but that's where it's where it works today.
Great. A general question, probably more directed towards Emmett and Eric here. Appreciate the insight. What other areas of innovation should lenders be looking at, not just valuation related, during this slow time to be prepared for the future?
Eric, I don't know if you want to, take a hold of that in a larger fashion, but I would say that you should be looking at any ways that you can acquire more information and more data sooner in the process and utilize that data to identify automation routines that will help you drive better decisions, drive quicker decisions, and drive information to the humans who need to look at it and make decisions off of that information if it can't be decisioned through the automation. It's something that we look at, a significant amount of time in the process. And so, as an example, income, can we get income sooner in the process? And can we use that data to make a decision move faster, use automation for the things that are easy decisions, clear decisions, and then drive those exceptions to humans to actually review them and make it more timely through the process. That's one example, but we're doing that with a lot of different things right now.
Yeah, I mean, I would echo all that, Emmett. I think
That's good insight, Emmett. And
you're good, man. But also just echoing that, just looking at process and efficiency, right? Take a minute to step back and look at kind of what you're doing, why you're doing it. So many times in this position and in previous positions at other lenders, I come across all the time. You ask somebody why they're doing something and they're not really sure. Right. So just understanding kind of what it is, what problem you're trying to solve, how are you looking to mitigate risk? I'd like to think about it. We're generally in the risk business while we're all in the mortgage business. We're looking to originate quality loans. And sometimes you can go too far. So just look at what you're doing, look at those processes. And appraisal is one space that we think there's opportunity.
Yeah, and I would actually add, something else to that on the question of, look at why you're doing it. A big reason why you would do any of it is just for the customer experience and being able to delight those customers that you have. So any of these, improvements, you should always be looking to ask the question, are we doing something that's going to help our customer? Are we doing something that's going to help our team help our customer? And how can we approach those things in a defined process that are going to make the best choices with the biggest impact to our customers?
Appreciate that, Emmett. Do we have any closing remarks from Justin or Scott? We're coming up on time here, but I think this was a great informative session. Any parting thoughts?
Yeah, I would just say that appreciate the time today, guys. Enjoyed it a lot. We're super excited about what the future holds in this space. Really excited about a lot of the technologies that we're seeing out there that we think can really play an important role in creating more objective data. So appreciate the time today. Thank you.
I would echo the same. Really appreciate everyone's time, and looking forward to continuing to advance our profession together.
Thanks, Scott. Much appreciated. And to everybody on the line, thank you so much for taking the time to join us today. We really appreciate your participation.
Thank you.
Thanks, everybody.
Take care, everyone.
Bye-bye.